It is Friday, September the 19th. One of the worst kept secrets ever. Interest rates we're going to go down.
Went down 25 basis points.
Yeah, they didn't follow the lead that I'd set for them, which should have been 50 basis points.
50 basis points. It was interesting to me. It was it's a vote. It was 11-1 to decrease rates. The one dissenter was not a dissent to not decrease rates, but she wanted what you said. It
50 basis points.
50 basis
that
points.
gives you the ability to stand back, and so now they're probably be forced to do 25 basis points again. So you should have headed it off at the past, just done 50 basis points.
Speculation is in October there would be another 25 basis points, and further speculation is by the end of the year we could see potentially a full 1 point in that movement of a cumulative decline.
The good thing about all of this is that we had plenty of time to sort of build portfolios toward an interest rate decrease over the last several months. Looking at the small cap areas and consumer discretionary areas were some of the places that we went to.
The same time, the market is giving news, and it is true news, that the market is slowing. And questions is it slowing, is it weakening, or has it weakened? Meaning that it's already in a very slow, bad position, and this move was to play catch up. Different variations of the words there.
Yeah.
It has slowed. The market has slowed. The economy has slowed.
Yeah.
But is it so weakened now that it is working back from keeping us in a recession?
I think that it's sort of the rule of middling. It's not, the market's not nearly as bad as maybe one side of the aisle thinks it is, and it's not nearly as good as another side might say. So we call that the theory of middling. Never as good or never as bad as you really think it is.
Our portfolios, as Gib alluded to, are positioned correctly, and we have seen the benefits of that. We continue to hold in those positions that are balanced between, in the equity space, between positions of growth and positions of growth and dividends. We think that's good. The decrease in interest rates have provided, as we've talked about, opportunities in the small cap area, in the financial areas, in the utility energy areas,
Consumer discretionary,
and discretionary areas.
Yeah.
So we continue to see that. I would say also that still at this point in time, in the analogy I like to use, we'll keep the seatbelt sign on.
Yeah.
We might serve some food and drink, but we're going to tell you that service might stop. But we do believe by the end of the year, the market is still going to be higher than where it is at this point in time.
I'd agree with that.
Now, let's tease it a little bit. For our clients that know of the exciting and really good, and folks, it is good, the association with TRPG that is underway.
TRPG is the Retirement Planning Group, right?
And next week we're going to bring you a little more full detail of all the things you should be expecting and seeing. And we first of all thank you for your patience, thank you for your loyalty. But next week we'll give you a full-blown picture of all the great things that are happening.
That's right. And the transition should be far along completed by midweek next week.
Right. So please call us if you have any questions. Always know we're here because we know it is your money.
And your money matters.
See you next week.